Scotch, Scotch, Scotch. I look good. I'm sorry, we're live. Hey, welcome to Back in the Black. I'm Merritt Black, your host, coming to you live from Place Your Trades Network. We host daily podcasts. We make yes or no picks with event contracts live on air. If you want to see our latest picks, chance to win weekly cash prizes, go to placeyourtrades.com. When you sign up, you'll get a free trade from our sponsor, Trade In order to claim that free trade, you have to open a Trade account on placeyourtrades.com. So, sorry about that awkward start to the week here. I was just channeling my whatever. So, welcome again. I'm Merritt Black, founder, head trader for Apteros Trading. We're a proprietary trade desk. We trade global futures markets. We're typically short term, and we also have some education. Our goal is to bring traders up from scratch, right? The newer you are to trading, the more we want to be able to help you and get to you before you build a bunch of bad habits. So check out apterostrading.com. So happy Monday. Hope you guys had a great weekend. One of the big things that I want to do with this show is to help you. Like, I'm so glad it's on a Monday, right? I want to take this show. I want to help people get their head right. I want to give you little golden nuggets here and there that you can take with you throughout the week and be a better trader. That's what I'm always about, whether I'm talking to my guys on the desk, whether I'm talking to, a mentoring student, whatever it is. That's really my goal whenever I'm doing anything FinTwit related. When I'm beating my chest on Twitter and showing fills and acting all crazy and acting like typing in all caps and stuff. What I'm having some fun there with myself, but what I'm also doing is trying to be transparent, trying to show executions, fills, things that I'm doing that people can take. I get people telling me all the time, "Hey, I'm trying to reverse engineer your decision making here," and people who come to me like that, I've had people who've put together spreadsheets on my decision making trying to reverse engineer things because they couldn't afford a course or something like that. We'll help you out, okay? If you're really, really working hard and you can prove that, email us, talk to us, reach out. Love to hear from you. We're always looking for hungry, not hippos, traders. All right, so with that in mind, step into my psychology room here. Let's oh, hey, glad you could hop on the couch there. Are you on the phone? Is he on the phone? No. Okay, never mind. It's your hour. Okay. Last year on the desk, one of my traders, he was Toby. Probably many of you on the stream here or in our community and whatnot, Toby. He's a fantastic gentleman. He's very well read. He's always staying abreast of all the latest blogs and podcasts and whatnot. And he brought something, I believe it was from Farnham Street. He's shared that with our desk, and it was just a really, really good deal. I took some notes, and I was looking through about last night what I wanted to talk about here today, and I came across some notes on this, so I want to talk about it. Avoiding stupidity is easier than seeking brilliance. Okay, let's pause right there. I think that a lot of traders show up to markets and they think that they need to find absolute brilliance in order to be successful doing it. When in reality, I think a lot of traders, and I'm talking about traders coming up the curve here, trying to taste profitability and consistency, I think they'd be better served to try to avoid some stupidity. I really do. And now this wasn't a trading article. In fact, the way I think the article opened up, I think it was a book on tennis. So I played tennis in high school. My life kind of revolved around tennis in high school. Decided not to play in college, but really, truly to this day, love the sport. My wife plays. We still get out there. In amateur tennis, guys, it's all about who makes a mistake. It's not about ripping one-handed backhands up the line for a winner and whatnot. It's about who's not double faulting, or who's not hitting an easy shot in the net, or who's not finishing a point with an easy volley or whatever. It's about being less dumb, right? It's about avoiding the stupid mistakes. It's about playing the percentages. Professional tennis at the highest level is still about that to some degree. You look at a Djokovic, you look at people, and the errors that they make are just unhumanly low. Okay, but that's a little bit of an exception. What's really like in the pro game, they really are hitting winners, doing really good things. They're beating their opponent. Amateurs rarely ever beat their opponent, but they beat themselves all the time. Amateurs rarely ever beat their opponent, but they beat themselves all the time. Is that not amateur trading? Is it not? So let's bring it to trading more specifically here. Are you on the... Okay. That guy looks like he's on the phone. I swear he's like, doesn't even care. Why is he even here? Okay, so bring this to trading. I have 4 points for you to bring this concept very specifically to trading. Avoiding stupidity is easier than seeking brilliance. Beat yourself. Let's be less dumb here. Let's stop beating ourselves, okay? Number 1, learn the fundamentals. Get really, 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 really good at the basics. Do the simple well. Then do the simple better. Then simply be the best at doing the simple. That's actually, speaking of tennis, and that's from one of my favorite trading books, which is a tennis book. So what are some fundamentals, right? Are you struggling with cutting losers? You ever heard of that phrase? Cut your losers, hold your winners. By the way, are you struggling to hold winners? Are you finding it psychologically difficult to hold winners as long as you would like to? There are some fundamentals, right, that you can overcome, that you can incorporate. And for example, holding winners longer, it's going to come down to another point that we talk about here later. But in general, you need a trade management process, right? You need some if-then scenarios. You need some key, absolute, not key, you need some defined actual variables for what would cause you to exit a winning trade that you're in. And if that's not there, you're not exiting, right? And again, I'm gonna really hit on that in another point here below. More specific trading truths, right? There are most things in trading are not universal truths. That's why FinTwit is entertaining, is because we see things differently. PAX has Capital Preservation Friday. I have Capital Acceleration Friday, right? We see things differently, and that's fine. He's great. But there are some universal specific trading truths, right? We can learn to read price action in a generic sense, right? What are the implications of certain combinations of bars or candles? We can learn to see when a market is consolidating versus when one is trending, right? And define whether there's an uptrend in place, a downtrend in place, or a balance or sideways consolidation in place. These are key universal things, and you can learn the fundamentals. You can start to define what time frames that they're important on or not, and you can start to develop a process and get better at trading and start to do the simple well and make sure that you're not, oh, I shouldn't have fought that trend all day when the day's said and done, right? You're all bloodied and battered. So number 1, learn the fundamentals. Number 2, identify where you can lose less. A lot of us want to just scour the charts for places where we can make a bunch of money. And I'm here to remind you this morning that you are maybe doing a good job of participating in a lot of those places on the chart where you make some money. But what you're not doing a good job of is identifying where you can lose less. What are your common errors? And when you figure out an error, don't just write in your journal and demand of yourself, don't do this, you idiot. Because guess what? I've been there, am still there sometimes with things. It's not going to fix it. That doesn't help. What you have to do is move beyond, don't do this. You have to find out something to do. What are you actually going to focus on and occupy your mind with and do and focus on doing as a daily process goal? We could do a whole nother webinar or talk about that, right? What are you going to focus on doing so that you are occupied doing that, so that you don't do the thing you don't want to do? Identify where you can lose less. Number 3, we'll keep this one short and simple. Simplify. If you got too much on your charts, if you got too much going on, too many time frames, too many markets, you name it, find ways that you can simplify. If you've got something on your chart that doesn't have a specific job description, get rid of it. And lastly, and this is the one that I said was going to tie in with, are you struggling to cut winners? Are you struggling to hold? Are you struggling to cut losers? Are you also struggling to hold your winners? And this is going to hit some of you right between the eyes here this morning. You ready? Make the choice to win as opposed to having a good time. This week, when you're trading, make the choice to win rather than doing whatever it is that's motivating you to get enjoyment or satisfaction or your jollies or a thrill or whatever you define in your trading, and you may not be aware of it yet, as having a good time. It's a huge deal. Most of you are pure amateurs, but you refuse to believe it. Work this week on avoiding losing rather than trying to be so brilliant and do all these fancy things. After all, it's the strongest swimmers who drown. Thanks. Let's talk some markets here, shall we? Alrighty. So, we're sharing my screen here, I hope. Yep, looks good. S&P. I think S&P futures, the S&P 500 here. So if you're trading stocks, SPY, right? Same thing. This is just the futures markets where I operate. It's at a really nice inflection here, okay? So this is a 30-minute chart here. So this was like Sunday night into Monday morning. And right here is where we closed on the sell-off on Friday. And this is what we've done Sunday night coming into the open here. So we're in kind of a gap up situation, at least relative to the close. We're still inside of Friday's range. But I think that this little, let's call it 3630 inflection is, maybe even let's call it 3640. I like that level better. But, somewhere in the 3630s, the 40s. There's a saying in trading, areas, not lines. That's why I drew an area here from 3628 to 3638. I didn't care what those numbers were. I was trying to give myself a nice little area of interest. So obviously the market is strong this morning. I think the buyers on the tape are convicted behind it. I think this has some real teeth to it here. So I'm kind of leaning bullish. Similar situation as the last Monday. Last Monday, I think we paid $4.25 for a yes on I think it was like a 37.50 yes or 38.50, something like that. We had a huge opening drive. It looked like we were going to march right to it, and then that was the high of day. We didn't get anything else accomplished there, so we lost $4 or whatever last week. We're going to try to get back in the black here this morning, but not with the S&P, with crude oil. Let's talk about crude oil. Crude oil, while the S&P is coming off some really good extremes for my methodology, NADRO methodology, you can go to apterostrading.com and find out more about that. Got some free webinars, things like that. The S&P is coming off some real extremes, and it's really tough for the market to just keep going in that direction without some form of mean reversion, right? This is the way markets operate. They don't just run in straight lines, they ebb and they flow, okay? However, the crude oil is actually in a setup position. Now, the ideal trade location to be getting long crude oil was really more into Friday and again buying this pullback here. And so you'd already be profitable in the position here. So we're going to chase it a little bit though. Okay. Crude oil is currently trading 84.08. I like this 83 level for our pick for today. I like 83, yes, in crude oil. Now before you all go try to front run me, we'll risk about 50 bucks. Boom. All right, so sorry I did that quickly because I didn't want you little grimy, little squirmy people trying to take my offer before I could take it. We're down $11. Unbelievable. We're down 13. Okay. We're down 11. Let's not freak out here. Nobody freak out. Be cool. All right. So we're going to make back potentially $4.75 here, right? We're risking 15.25 because we're in the money on this. It's a safer bet. So we're going to see if we can get back in the black by a little bit, and then next week we'll even accelerate it further. All right, guys, that really concludes the picks for today. Hope you had some fun. Hope you learned something, right? I really hope you go back and listen to the recording. I really genuinely not whatever. Go back and listen to it. I really believe in what I told you this morning around the psychology, around getting our minds right for this week. I really think that can be helpful. And so I hope it was. We'll see y'all next week. Cheers.